Hi, welcome to Finantax Clips. Today, we're diving into an exciting and crucial topic, from Shark Tank to Wall Street, how to secure the right business loan. Navigating the world of business loans can be challenging, yet it's an essential part of growth and success. Securing the right loan could be the difference between a flourishing business and a struggling one. If you're an entrepreneur or planning to start a business, this video is perfect for you. Imagine an entrepreneur, John, who had a brilliant business idea. John had always been the creative type, full of innovative thoughts and solutions. One day, he had a light bulb moment, an idea that could revolutionize the tech industry. So he took the plunge and started his own company. John's journey was exciting yet fraught with challenges. The early days were spent working out of his garage, tirelessly developing his product. He wore many hats, from coder to marketer, problem solver to negotiator. He soon realized that starting a business was much like steering a ship in stormy seas. There were days when the winds were in his favor, and then there were days when the waves threatened to capsize his dreams. As John's business started to take shape, he was met with another hurdle: funding. He had exhausted his savings and was struggling to keep the lights on. He knew his product had potential, but without adequate financial support, it was like a rocket without fuel. He needed an investment to take his venture from its infancy to a fully fledged business. John understood that to grow, his business needed more than just his time and energy. It needed a financial injection to hire skilled staff, invest in research and development, and to market his product effectively. He started considering the idea of a business loan. He knew this could be the lifeline his venture needed to not only survive, but truly thrive. However, the world of business loans was a labyrinth that John was unfamiliar with. He was confronted with questions like, what kind of loan should he get? Which lender should he approach? How much should he borrow? What would be the repayment terms? These were all daunting questions, and John realized he had a steep learning curve ahead. John knew he needed a business loan, but where does one start? As we dive deeper into this journey with John, we'll explore the world of business loans, from understanding them to securing the right one. So stay tuned as we navigate this complex yet crucial aspect of entrepreneurship. Business loans are not a one-size-fits-all solution. Like a bespoke suit tailored to fit perfectly, the right business loan should align with your specific situation and needs. There are a variety of business loans available in the financial market, each with its unique characteristics and benefits. First, let's talk about term loans. These are your traditional loans, where a bank or financial institution lends you a specific amount of money that you'll repay over a set period with interest. These loans are often used for large long-term investments, like buying new equipment or expanding business premises. Next, we have short-term loans. These are smaller loans that are designed to cover immediate costs or cash flow issues. You usually have to pay these back in under a year, making them a quick fix for unexpected expenses. Then there is the business line of credit. This works similarly to a credit card. The lender sets a maximum credit limit, and you can borrow up to that amount. Interest is only charged on the money you've actually borrowed, making it a flexible option for businesses that have fluctuating cash needs. Now let's delve into the concept of interest rates and repayment terms. An interest rate is essentially the cost of borrowing money. It's how lenders make a profit. This rate can be fixed or variable, meaning it either stays the same or changes over the life of the loan. Repayment terms, on the other hand, refer to the time frame and manner in which you pay back the loan. This could be monthly, quarterly, or annually, and over a period of months or years. The length of these terms can affect the total cost of your loan, as longer repayment periods usually involve more interest payments. Remember, every loan comes with its share of advantages and potential pitfalls. It's crucial to thoroughly understand the terms and conditions before signing on that dotted line. John needed to find the right loan for his unique business needs, and so do you. In the next scene, we'll explore the process of securing a business loan. Stay tuned. Securing a business loan is not a walk in the park. It's a journey that requires careful planning, meticulous preparation, and a dash of tenacity. So let's delve into the key steps involved in securing a business loan. First off, you'll want to start by researching lenders. Not all lenders are created equal, and each one has its own set of criteria and loan offerings. Traditional banks, online lenders, credit unions, and even governmental programs all have different advantages and disadvantages. It's essential to understand what each lender is looking for, what they offer, and how they align with your business needs. Once you've done your research, the next step is preparing a business plan. This isn't just a simple document outlining what you plan to do with the money. It's a comprehensive roadmap of your business's future. It should detail your business model, product or service offering, target market, competitive landscape, and financial forecasts. This plan is your opportunity to convince lenders that your business is worth investing in. Now, the business plan is not just about the future. It also needs to include your past and present. This means providing a detailed financial history of your business. Lenders will want to see balance sheets, income statements, and cash flow statements. They'll be looking for a strong track record of profitability and a solid financial foundation. But it doesn't stop there. Lenders will also want to see your personal financial information. This may include your personal credit score, personal income, and any personal assets or liabilities. This gives lenders a fuller picture of your financial stability and your ability to repay the loan. With your business plan and financial information in hand, you're ready to apply for the loan. Each lender will have its own application process, so make sure you understand what's required. This could include filling out an application form, submitting your business plan and financial information, and potentially going through an interview process. And here's a pro tip: don't apply to just one lender. Apply to multiple lenders to increase your chances of securing a loan. But remember, each application takes time and effort, so choose wisely. Finally, be prepared for a waiting period. The time it takes to get a loan approved can vary greatly, ranging from a few days to several months. During this time, it's important to stay patient, stay positive, and be ready to provide any additional information that lenders may request. Securing a business loan can be a daunting process, but with the right planning and preparation, it's a hurdle that can be overcome. Remember, the goal is not just to secure a loan, but to secure the right loan that will help your business grow and thrive. John was ready to take on the challenge, and with these steps, you'll be ready too. So let's get started on your journey to securing a business loan. John started his journey to secure a business loan from Shark Tank to Wall Street. Imagine starting from a reality television show where you pitch your business idea to a panel of 5 sharks, experienced entrepreneurs and investors ready to put their money into promising ventures. That was John's starting point. He had a dream, a vision, and a solid business plan, but what he needed was capital to bring it all to life. John's first experience with securing financing came from the sharks. It was nothing short of a baptism of fire. He had to sell his idea, convince these seasoned entrepreneurs that his business was worth their time and money. It was nerve-wracking, to say the least, but it was also a profound learning experience. He learned the importance of a strong pitch, of demonstrating not just the potential profitability of a business, but also its value to consumers and society. The sharks were interested, but their terms were steep. They wanted a significant slice of his business, more than John was willing to give. It was a hard decision, but he chose to decline their offer. However, he walked away with valuable insights and a newfound confidence. He had pitched to some of the toughest investors around, and they had seen potential in his idea. That was a win in itself. But the journey didn't end there. Next stop, Wall Street. John's aim was to secure a business loan from a bank, a more traditional route. This was a different ballgame altogether. Banks, unlike the sharks, are risk-averse. They have stringent criteria and require detailed business plans, financial projections, and collateral. John spent weeks preparing his application, poring over financial statements, refining his business plan, and gathering all the necessary documentation. He learned the importance of showcasing his business's profitability, stability, and growth potential. He learned about interest rates, loan terms, and how to negotiate for the best deal. Finally, after many sleepless nights and countless revisions, John submitted his application. The waiting game began. Weeks turned into months, but finally the call came. His loan had been approved. It was a moment of joy, relief, and validation. His hard work had paid off. He had secured the financial backing to take his business to the next level. John's journey was not easy. but he finally secured the right loan for his business. From Shark Tank to Wall Street, it was a journey of learning, growth, and determination. It showed that securing a business loan is not just about getting the money. It's about understanding your business, knowing its worth, and being able to communicate that effectively. It's about evaluating your options, negotiating the best terms, and making informed decisions. And most importantly, it's about believing in your vision, persisting through challenges, and never giving up. John learned some valuable lessons along the way. Securing a business loan is not a task to be taken lightly. It requires careful planning, thorough research, and a deep understanding of your business's financial needs. Let's delve into some of the lessons John learned when securing his business loan. First and foremost, know your business inside out, understand your business model, the market you're operating in, and your financials. Lenders want to see that you've done your homework and that your business has the potential for growth. Secondly, build a solid business plan. This is your roadmap. It should outline your business objectives, strategies for achieving them, and the financial projections. Your business plan is a way of showing lenders that you have a clear vision for your business and a strategy to make it successful. Thirdly, keep your credit score in check. Your personal credit score can play a significant role in securing a business loan. Lenders view a good credit score as a sign of financial responsibility. So make sure you're paying your bills on time and maintaining a low debt-to-income ratio. The fourth tip is to choose the right lender. Not all lenders are created equal. Some may offer better interest rates, while others may offer more flexible repayment terms. Shop around, compare different lenders, and choose the one that best suits your business needs. Fifth, be prepared for rejection. Even John faced rejection in his journey. Rejection is a part of the process. Don't let it discourage you. Use it as a learning experience to improve your loan application for the next time. The sixth tip is to consider alternative funding options. If traditional lenders are not an option, consider crowdfunding, angel investors, or venture capital. These alternatives can provide the needed capital and often come with added benefits such as mentorship and networking opportunities. Lastly, be patient. Securing a business loan can be a lengthy process. It requires patience and persistence. Don't rush the process. Take your time to ensure you're making the best decisions for your business. In conclusion, securing the right business loan is not a one-size-fits-all process. It's a journey that requires preparation, patience, and persistence. It's about understanding your business, knowing your financial needs, and finding the best lender that suits those needs. Securing the right business loan is a critical step towards business success. Don't let the process intimidate you. With the right preparation and mindset, you can secure the loan that will help propel your business to new heights. John's story is a testament to the importance of securing the right business loan. It's a tale that we've followed from the ambitious startup stages through the Shark Tank and onto the bustling streets of Wall Street. Let's take a moment to recap the key points we've covered in this journey. We started with an understanding of business loans, breaking down the complex financial jargon into digestible pieces. We discussed the different types of loans, the various terms, and the implications they can have on your business. All of this knowledge is crucial in making an informed decision when it comes to securing a loan. Next, we delved into the process of securing a business loan. We discussed the importance of having a solid business plan, the necessity of financial projections, and the impact of your credit score. We went through the steps of approaching a lender, negotiating terms, and finally signing that all-important contract. Then, we took you on a journey from Shark Tank to Wall Street, showing you the real-life implications of securing the right business loan. We saw how John's business transformed from a budding idea to a thriving enterprise, all thanks to the financial support he secured. Finally, we shared some invaluable tips for securing the right business loan. We talked about the importance of shopping around, the value of good advice, and the need for patience and perseverance. Remember, securing a business loan is not a sprint, but a marathon. It's about finding the right fit for your business that will support your growth and success in the long run. And so, we come to the end of our journey. We hope that this video has provided you with the knowledge and confidence to embark on your own business journey. Remember, every successful business journey begins with the right financial support. Thank you for watching Finantax Clips. Don't forget to subscribe, share, and like our videos. See you in the next one.